I think we're at that hockey stick moment where you see in the next 6 to 9 months doubling of usage from 150 million to 300 million, and then pretty soon we're going to be over a billion, and then Bitcoin will be ubiquitous and entrenched and part of everyday life, and people won't even be thinking about it. They'll be using it, but they won't even know they're using it. Just like people use the internet and they don't really think about the protocol that underlies the internet and how it works and why it works. They just use it. Same thing with Bitcoin. It just becomes part of the fabric of our reality.
Yeah.
Max Keiser is an American broadcaster, filmmaker, and host of the Keiser Report. He is also a prominent name in the crypto community and a staunch Bitcoin bull. In a recent interview, Keiser talks about the current phase of the crypto asset. He explains that we are right in a hockey stick moment, the moment just before a sharp increase that would see many more people around the world using the asset. Keiser also compares the asset's adoption to the adoption of the internet. He states that during the earlier stage of the adoption of the internet, many people doubted if it was going to grow exponentially. But today, internet has over 4.66 billion active users. Keiser adds that Bitcoin will get to the same point where it becomes ubiquitous and necessary to people's daily activities. He also talks about the effects that institutional adoption could have on the crypto space and how retail investors can protect themselves. Please watch the video to the end, click the like button, and subscribe to the channel. Enjoy the video.
I was running an internet company in the 90s, and even after Netscape went public and you had a big surge of use of the internet, there was a period there around 1997 or so where people like Paul Krugman of the New York Times and others were questioning whether or not this internet thing was going to survive, or was it just a fad?
Fax machine.
And then we saw that hockey stick moment. That's the character of exponential growth, is that you've got that doubling effect, that factoring, that exponential growth. And so now I think we're at that hockey stick moment where you see in the next 6 to 9 months doubling of usage from 150 million to 300 million, and then pretty soon we're going to be over a billion, and then Bitcoin will be ubiquitous and entrenched and part of everyday life, and people won't even be thinking about it. They'll be using it, but they won't even know they're using it. Just like people use the internet and they don't really think about the protocol that underlies the internet and how it works and why it works. They just use it. Same thing with Bitcoin. It just becomes part of the fabric of our reality.
Yeah.
It's happening really fast, but it has a price, and that is what people focus on. And if it's not moving in any given minute of every given day in the direction people want it to move, it becomes like, oh my God, this is not happening as fast as I would. With the internet, it wasn't actually a price that was traded in terms of the where it was in the adoption cycle. Having said that, I'm sure a lot of people would have loved to have the opportunity to actually buy part of the internet, which is what you can do with Bitcoin. You're actually buying something as big as the internet, as ubiquitous as the internet, but you're actually able to own a piece of it. So that's the big difference, and that is what is remarkable in a lot of ways.
Retail investors championed the first phase of Bitcoin's adoption. However, there has been a massive influx of public companies, asset management firms, and other institutional investors over the past few months, with many more to come. There is also agitation for regulation in spot and futures funds based on the asset. While many are worried that these developments might disturb the decentralized status of the crypto asset, here is what Keiser has to say.
Well, the design of the protocol invites everyone to join, and it also invites attacks. And the game theoretical aspects of it are intact, and they're working beautifully. So you want as many people to be participating as possible. You want both Russia and Ukraine buying Bitcoin. You want every country to be buying it. You want Wall Street buying it. You want Wall Street trading it. You want Wall Street creating all the derivatives they want to create on top of the Bitcoin stack. The greatest thing we have, though, is the ability to pull our keys off the exchanges. So if they want to create a multi-tiered Ponzi scheme based on a Bitcoin base layer like they do in the gold market, for example, which hasn't had good price discovery now for over 10, 15 years, we have the ability to pull the private keys off the exchange essentially and collapse any major Ponzi scheme. There will be credit cycles. I mean, Bitcoin will still be used as collateral. There's a lot of products here that are being introduced for mortgages and other types of leveraged products, and that's fine. It's pristine collateral. Michael Saylor is now, borrowing against his Bitcoin position at
to buy Bitcoin.
To buy Bitcoin. He's engaged in a leveraged attack against the dollar, a speculative attack against the US dollar, because if you can borrow money at these artificially low rates that the central banks have kept so low as part of a failed bank policy now for years, and you can buy Bitcoin, you're going to exploit this incredible arbitrage between the central bank totally mishandling policy for over 20 years now, and the presence of this pristine, perfect money Bitcoin. And so Michael Saylor sees that, and he's taking advantage of that. When I talked to Ricardo Salinas Pliego about this, he said he's 60% Bitcoin, and I'm like, well, you know, that's a baby position. You know, you need to get 120% Bitcoin. You know, everything you have, you need to put it up as collateral and go all in. You know, and he kind of laughed at that. But it's hard to argue with a guy while you're on his jet. Clearly, he's doing something right.
Keiser also states that America needs to grow some balls and be more involved in the cryptocurrency space or be left behind by other countries that are not afraid to get in. Listen to his explanation here.
With the lack of testosterone in society is causing a collapse in society. These other countries are not afraid of balls, and you know, they'll be in charge. So America has to decide, do we want to be taking orders from other countries because we don't like balls? Or are we going to man up and say we have balls and we're not going to take orders from India, China, Russia, and Iran? We're at the risk of being a subservient housekeeping, you know, house boys, rent boys. There's a nation of rent boys in America that'll be servicing Iranian, Chinese, Russian, and Indian men and women. That's what we're going to end up doing, Scott. You know, unless we get fucking our balls out and start to be, you know, represent that we have values here. So Bitcoin, everything about Bitcoin represents everything that you would find in the Constitution and the Bill of Rights, and everything that we have fought for in this country for over 240 years. So the easy thing to do is just to buy Bitcoin, accumulate Bitcoin, promote Bitcoin, and it's like having balls. If you're a woman and you want to have balls, and you want to compete like a man, buy Bitcoin. If you're a man and you want to stop being without balls,
or just have bigger ones,
have bigger balls, buy Bitcoin, and you will take care of your gonad problem. So Bitcoin are basically our balls. That's I think what we're saying here, Scott.
What do you think about Max Keiser's interview? Please share your comments below and hit the like button. Thanks for watching the video.